Are you one of the people who are experiencing crazy rises in your rent per month? If so, you're not alone, because we have been seeing it and hearing it from people across the board in the Nashville area that they are seeing their rent prices go way up if they want to renew for the following year. So we're here today to talk about the fact that maybe you could potentially purchase a place of your own so that you have to so you don't have to keep paying those really high prices. And joining me today is Jackie Hurtis with Interlinc Mortgage. Jackie, thank you so much for joining me today.
Of course, thank you for having me.
So Jackie,
this is a very timely topic.
Exactly. I cannot tell you how many people I've seen post about it on social media, on various like next door boards. They're talking about how their rent is increasing significantly. And so, I mean, we're seeing home prices rise as well. So everything's going up. But one thing is, a lot of times people don't know that maybe they have the ability to purchase. And that's a way to escape at least the rising rent prices. So I figured we could dive into a little bit of stats and just kind of give people an idea and maybe open their eyes to a possibility that maybe they didn't even know was there for them. I think before we jump into stats about just like the different average rental prices, I think sometimes a hurdle into the idea of home ownership comes with the financial pieces involved. So let's first talk about what the finances even look like. You know, in terms of down payment, there is that big, huge myth out there that you have to have 20%, but let's first take a look at what are the financial pieces of it that people need in order to be qualified to purchase a home.
Yeah, good starting point. So right off the bat, down payment is the big one. Like you said, a lot of people assume that they need 20% down, and that's just not accurate at all. Most first-time home buyers are doing anywhere from 0 to 5% down, depending on the loan program that they choose. So, I mean, we have a program here in Tennessee, THDA. They'll give you 6% of the sales price towards down payment and closing. Up going that route, honestly, end up out of pocket almost nothing. The 6% loan from THDA covers the entire down payment, and then a large majority, if not all, of the closing costs, just depending on the sales price that they end up at. So that's one option. There's VA, which is a zero down program. There's USDA, if somebody's willing to look out in a rural area, it's a zero down program. And then FHA and conventional are going to be anywhere from 3 to 5% down, depending on the scenario that they go with. So definitely do not need 20% down. Most first-time home buyers are not doing 20% down.
Right. And so if people are wondering, okay, well, you know, I have been saving, we talked about down payment, but what else? Because obviously closing costs are added into it. So, and also I know that you and I have talked about this separately, but just if somebody has been employed with the W-2 for a couple of years, you know, all of this starts to lay the foundation for being able to be pre-approved.
Yeah. So yeah, whenever you finance a property, there are closing costs involved. Those are all the third-party fees that go into financing the property. So you have lender fees, title fees. A title company will come in and do a search on the property to make sure you're taking clear title to the house. Appraisal fee, credit report, etc. All of those fees are going to vary depending on the sales price and the loan amount. But to give you a really rough idea, I'd say like 8 to 10 grand, depending on the sales price. We'd go more in depth in that. If you wanted to actually get pre-approved, I would show you exact numbers, but just to give you a rough idea. And those costs are incurred on top of the down payment. So just because you're doing a zero down program doesn't mean that you you'd still have the closing costs on top of that, but there are ways around getting those paid, whether it be gift from family member, seller credit in the ideal world. I know that's tricky right now with the way the market is at. Or THDA, they give you that 6% loan, which covers down payment and a large majority of closing costs. So there's different avenues to get that paid. People sometimes pull from their 401k or retirement account to do it. I know a lot of people don't realize that that's an option. But yeah, closing costs on top of down payment, there's ways around that.
Awesome. So let's kind of dive into the numbers a little bit. And of course, as we're going to be talking about these numbers, in terms of the average rental prices, of course, home values continue, our market's still moving, homes are still appreciating. And so these are going to be rough numbers. And of course, if someone's interested in purchasing, talk to me, talk to you to get the accurate numbers. But rent.com says that the average rent for a 2-bedroom apartment in Nashville, so we're talking about Davidson County, around the heart of the city, it's saying that the prices actually skyrocketed by 50% year over year from 2021, with the average for a 2-bedroom being $2,658. So getting close to that 2,700 number, which is crazy. But they're saying that,
it breaks my heart. It breaks my heart that people are paying that.
It is crazy to me, because especially, I told you this before, but like when I first moved to town and I lived on West End Avenue for a 1-bed, 1-bath, I literally paid $985. Now we're looking, because speaking in terms of 1-bed, 1-bath, I've got these stats pulled up. It says that a 1-bedroom apartment rent jumped 32% year over year, making the average rent $1,991. So we're talking about basically $1,000 more than what I paid when I moved to town. I lived in a fabulous location. So if people are looking at these numbers, like around that 2,658, if you're paying that in rent, what would you, obviously somebody can pay that same amount or around the same amount for a house, right? That's fully capable of being a mortgage payment. So around that rough number, what would you say would be kind of a guesstimate in terms of purchase price? And of
sales
course,
price.
Of course it'll vary. There's a lot of factors that go into it, but what could someone potentially consider?
You're probably looking at high 3s to low 4s on sales price, depending on credit score, down payment, loan program that you choose. So you and I were talking a little bit ago, and you said the average, or yes, was it the average sales price for Davidson County was around $440,000?
Let me pull that back up real quick. It was median. It was median.
The median sales price was around $440,000 here in Davidson County. We did just quick numbers on that on a conventional loan, assuming that you're putting 5% down on your primary residence. That mortgage payment on the high end would probably be somewhere around $2,900. So it's a little bit higher than what they're paying in rent if they have a 2-bedroom at $2,658. But you're also getting significantly more square footage, more likely than not, your own place, and you're starting to save your own equity. That money is going towards your equity, not your landlord's equity.
Which is a great point. And I will say, so in Midtown, so in a fabulous location downtown, their average rent for a 2-bedroom is $3,219, according to rent.com. So they could more than afford what not more than, but they could certainly afford, something around
that $2,900 payment.
Right. And like,
absolutely. And then sorry, keep going.
No, but like what you just said about the equity, I don't know if everyone necessarily always understands how that actually builds your wealth, but I know that, you were just alluding to it, which, that owning a home is one of the best ways to build wealth.
Oh, absolutely. We have, we were just sharing like success stories with past clients like a week ago. And a realtor in the group had somebody who purchased their home in 2020, I want to say. They were in the house for like a year and a half, just sold it and made $60,000 on the sale for having it less than 2 years. They were able to take that money, pay off student loans, car loans. That's life-changing money that the average person is not going to save $60,000 over a year and a half. It's just not possible. But it does become possible with real estate, right? With the way that we've seen the market change in the last 2 years, the way homes have been appreciating, that is life-changing money that you're just missing out on the opportunity if you're not in the market, if you don't own a home.
Exactly. And speaking of success stories, I have clients and they did buy in the Franklin area. So we're talking about Williamson County now, which we know Williamson County and Franklin has just exploded over the last 14 months in terms of the demand of people coming in. but they bought last year in 2021 in Franklin. And I recently ran a CMA as just like a, hey, here's like your year update. Here's the equity you've built, $200,000. And like you said, you can't.
And how much time? How long have they been there?
I mean, at the exact 1 year mark, it was 200 grand, but I mean, it's been a little over a year now, but yeah.
That's insane.
Like, and so what people don't necessarily always understand is, even though the market is tough to get into and there can be all the news stories out there saying you can't buy, but you know, one thing and one kind of conversation that I know a lot of us are having is telling people, especially those first time home buyers, it doesn't have to be your forever home. If you can get in, stay in it a year, 2 years, 3 years, 5 years, that equity that you build and how much the home value appreciates, you can then choose to sell that home down the road, take the equity you've built, and then roll that potentially into a down payment for more of that dream home scenario. You know, if you're renting and you continue to rent for the next 5 years, you know, you don't have that equity anywhere to roll into something else. You can maybe hope to save enough money for a nice down payment down the road. But to me, and I know it sounds like the real estate agent thing to say, but to me, if you can get in and find a way in, it does allow you that ability to really grow your wealth.
I mean, just with the two examples you and I shared, I do hear that a lot. People are like, why would I buy right now? Like, I can't find anything that I like. I'm priced out of the market. I have to be further out of town. All of that might be true, but you're not going to get your dream home the first go around, but it gets you into the market. It gets you one step closer to being able to purchase that dream home. Because your clients, they weren't going to save $200,000 in a year, but
No.
that house that they just bought got them $200,000 in equity, which puts them in a great position to go and buy. They might already be in their dream home, but puts them in a really good position to go buy the next really good position if they wanted to.
Yeah.
And you just don't have that opportunity when you're renting.
Absolutely. And so like we were talking about earlier, you know, with these numbers, with the way that we've seen rent increase, if somebody does have maybe a little money tucked away and they've got that solid W-2 income, there is the potential, depending on, I'm guessing, credit score and their debt to income ratio, depending on those factors, there is a very real possibility that maybe they could afford something even in this market.
Oh, absolutely. And so, yeah, I know, just to touch on the other qualifying pieces, you and I talked about down payment. Credit score is a big one. Minimum credit score for us is 580. Okay. 740 and above is top tier in the mortgage world. If you land somewhere between, we just look at the different options for you, figure out what's going to be the best loan program for you at that time. Debt to income ratio is huge. That helps us determine how high you qualify for on sales price. We look at your gross income coming in, compare it to your monthly debt obligations that are showing up on the credit report. That tells us how much room is left for the new mortgage payment. But W-2, I think you and I talked about this. A lot of people think that they have to be at the same job for 2 years in order to qualify. That is not the case at all. If you're a W-2 wage earner and you're earning hourly wage, it's very stable, 40 hours a week, or salaried, I could use an offer letter. You wouldn't even have to start at that job. I just have to show a 2-year job history. But you could even bounce around from job to job and that's not a huge deal, as long as I have an offer letter or I have pay stubs showing a consistent amount of income coming in. It's a little bit different if you're self-employed. They do want to see a 2-year history. If you're W-2'd, I don't need years at the same job in order to qualify.
Now, what about if someone's self-employed? I know that those hurdles were more, but what does the process look for those who are self-employed?
Self-employed, you almost always need a 2-year history. There are sometimes ways around it with a portfolio program, like a bank statement program or a 1099 program, where you were in the same line of work previously as a W-2 employee, and then you just transitioned into 1099. There's ways to get around 2 years. 9 times out of 10, you're going to have a 2-year history. And then For a traditional mortgage, conventional loan, FHA, something like that, you're going to have to provide your most recent 2 years of tax returns. And we have to look at the net income on those. So it is definitely different than a W-2 wage earner. We can add some write-offs back in. If for whatever reason your tax returns don't look great, we can look at portfolio programs like the bank statement program or 1099 program that I just mentioned. It's just more documentation on the self-employed borrower, but it's definitely doable.
Yeah, there's definitely more hurdles to jump.
They're fun. Yeah, it's definitely doable.
So I know that obviously it's all over the news talking about interest rates. And so a lot of times people can say, well, I'll wait till they calm down, or maybe like, have I missed the boat? So how do you approach those conversations, especially with a first-time home buyer?
Mortgage rates are what they are. We can't change them. We don't have any control over them. Rates are expected to continue going up throughout the year. You and I were talking about this. Prices on everything are going up. Gas prices are going up. Home values are going up. Grocery prices are going up. Everything is going up. So home values are also going up, which is good news for us. But because of that, because of inflation, mortgage rates also have to go up. So they are expected to continue going up throughout the year. At what pace or to what level they're going to level off at, we don't know. But the sooner you can get in, the better. And if rates happen to go down, that's great news. And you can always refinance. There's no prepayment penalty to any of these loans that we're doing. You can always refinance and drop to a lower interest rate if it makes sense down the road. So I'd say get in while they're where they're at now to prevent them to get it waiting later in the year where they could be higher.
Right. I mean, that's something that I've even seen. And again, I always feel like people expect you to say, get in sooner, because it can be like a sales tactic. But really, if you're looking at where things are expected to go, I know a lot of times in the real estate world, we have a conversation about the cost of waiting. But at this point, with the way that things are predicted to move the rest of the year, it really will cost somebody more money. As interest rates go up, their buying power is going to go down, and it is truly going to cost them more money the longer they wait.
Yeah, and I think some people are bummed out that they missed out on the rates in the twos, right? Understandable. It's a tough pill to swallow when you look at 5.5 when we were at 2.5 a year ago. But those rates, we don't have those interest rates, and we may not have those interest rates ever again. Those were historic lows, and there's a reason for that. The Fed was intervening during COVID. Those were artificially low mortgage rates. So best case is that we get back to that and you can refinance down to that lower rate like everybody did the last couple of years. Worst case is rates are where they're at and you just get in where you can, and you get in now before home prices continue to go up.
And interest rates continue to go up.
Exactly.
And so kind of to bring it all back around for everybody, we, as you explained, these average rent prices that we are seeing, there is the potential if somebody, has that stable income, has a little money saved. And even if they don't, I'll say, I have a very sweet client, and once she got the notice that her rent was going to be exceedingly raised should she renew, her dad was willing to help gift her the down payment in order to be able to do a down payment on a new build. And granted, I'm fully aware that not everybody has parents or family members that can do that gift. However, that may be something that people want to consider if it's a possibility, just because in the long run, it's financially building them wealth that they could pay that gift back and then still have money in the bank. But, there are solutions instead of just like continuing to pay exceedingly high rental rates for the next several years.
Agreed. And the other benefit of once you get in, like we've seen rent skyrocket, right? Once you're into the house, your mortgage payment, that principal and interest payment does not change. So rents could continue going up with this inflation, but you are locked in for most likely the next 30 years with that same principal and interest payment, which is huge.
Yep. Exactly. So again, I know the news will tell you that if like you're single in Nashville, you can't buy, or that, you know, they want to make everything seem doom and gloom. But if you're really tired of paying high rental prices, then this may be the sign to take a look into if home ownership is possible.
Oh, agree 100%. There's no harm in looking to see what you qualify for. It's just like tell this to everybody who comes to me like, oh, I'm not sure if I'm ready to get pre-approved yet. Like going and talking to a financial planner. You don't go there because you have $1 million in the bank. You go to talk to the financial planner to get $1 million in the bank, right? So you meet with a lender, you start the pre-approval to figure out where you need to be in order to purchase. You might not be ready to go this year. Maybe you have to save up for a year. But the sooner you have that conversation, the sooner you're going to be ready to go.
Knowledge is power. Well, Jackie, thank you so much for joining me today. If you are thinking about maybe ditching the high rent for home ownership, please don't hesitate to reach out to myself or Jackie. This is, again, Jackie Hurtis with Interlinc Mortgage. Thank you guys so much for taking the time to watch. I'll see you next time.
Thank you.